All right, ladies and gentlemen, got your watches coming into November 11th, 2019, and two stocks are going to go crazy. I thought it was going to be a chill week. Now that we're getting earnings wrapping up, I thought we would kind of be calming down, but then there's two earnings. One of them met the criteria. I have a play of the week to share with you guys. I'm probably going to be picking this up tomorrow, but I want to see the prices as well as some of the other news and responding to where we are right now with the markets, near the all-time highs, how the trade news is, and kind of get us back into the mix of where to go from here. So I have the keys for tomorrow. I got a play for tomorrow and this week, focusing on two stocks. One specifically, though, is my favorite. And then I got the rest of the companies I will be watching tomorrow. So you guys know what to do. Drop your thumbs up on the video. Make sure you're subscribed. Oh, and we're going to go over the Qualcomm play and talk about kind of how we're going to handle that one, because that one is up a lot. If you guys saw that one, we've been talking about it with earnings. We got the 92s. Now it's at 94s. And it's setting up a unique opportunity here. So I'm going to talk about how we're going to play that given our contracts are expiring this week. And that is pretty much it. So make sure you guys drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and pinned in the comments. Tune in anytime during the market and you could watch us do all of these trades live. So the play I'm going to share with you guys, I will be doing it live on stream. If you're going to miss that, get your stream insurance, aka your stream alerts. You already know what it is. Only fee we ask from you guys, though, is be positive and respectful. Keep the momentum going. I love you guys. So let's get into it. But don't forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at, what you're watching tomorrow. Post it in the comments. And now let us get into the keys. So right off the bat, though, the key for tomorrow is just going to be the beginning of the end or the beginning of the buying the dip moment. And what I mean by the beginning of the end is both the beginning of the earnings season and kind of this reliance where the market's going to be doing its own thing because of what's happening with earnings. I think we're going to start seeing some things converge, or could even be the end of these all-time highs and we might get a break from these levels up here, kind of take a moment down, and now that either could lead to a bigger move. I'm going to talk about what we're waiting for with volatility and kind of what's going on with the market, but even then it could also bring about a moment to now get a little cool off. And depending how this week and the next week plays out, December's right around the corner. What that means for the implications for the end of the year, this is doing something to the market and even explains why the market has been going straight up. A lot happens towards the end of the years and depending on how the initial years went. But that's leading us to the thing, we're going to be seeing how trade is one of the main things we're going to be watching for tomorrow. We did see some things kind of fall apart and go negative, positive last week. Watch to see now how that type of news affects the market. But then the other thing is now watching the bond rates as well as the rotations, like I said, coming into the end of the year. If the bond yields go too high too fast now because you guys are seeing TLT reverse, that is also giving implications, because once the bond levels reach a certain point, that's going to change the attractiveness of certain investments. And then seeing if that comes in towards end of November, end of December, how that we see with the 2019, you might even start to see a bigger rotation. That's how some people are categorizing what's going on. People are starting to say now, once we get past that second week in November, everybody's just going to start positioning to get their end of the year strategies all set, buy the underperformers, buy anything that hasn't been doing well, pad the stats, that window dressing. But it's going to be interesting to see here with the news as well as now being so high, how that's going to work. But it does make sense here. We've seen some bigger leading companies. So watch now to see if there is any rotational elements, and that is what I'm going to be looking out for, is to see what is rotating. And if we get that, and watching this next week, it's either going to be a lot calmer or it's going to be very, very aggressive even as we come out the gates with the earnings. So watch that. And that's pretty much it. Let's talk about the play of the week now. So there's a few things I need to discuss with it, kind of my logic, but here it is, baby. We're finishing off Quali World this week. We're going to wrap up the Qualcomm plays, how we're going to play that, and now it's on to Wally World. So I'm hesitant about this play because honestly right now I feel that we should be playing conservative. We've taken a lot of big gains here, and kind of, again, considering the underlying nature of this week like I just explained, if we wait till a confirmation of rotation, highs, a dip, or now even volatility, that is one thing I want to, like I'm saying here, if we could pinpoint the volatility, I think the right move right now is to play a little bit more conservative, shift to some of the spreads and not go after too heavy on these earnings plays, and wait until we could either pinpoint the volatility, the rotation, or a reversal or confirmation in any of the sentiment towards trades or anything like that. But Wally World meets the criteria. So this is the criteria we've been talking about. We've been talking about what's been pricing in and how it works. Now, this is in relation to there being an event. So you can see here, this is November 22nd. I have plays for both dates, but November 22nd, as you guys have seen with Qualcomm, having that extra time goes a long way, even if it's just 1 week, and it still allows us to get pretty cheap. So if you're a real sicko, you could go for the short terms and two. This is what I'm going to be doing in the morning. I'm not 100% on it. I want to see how prices open and what happens with the market. We're going to see some news before market opens anyway. So I want to see what happens. So again, be careful with this. This is just what I'm doing. Be smart. Doesn't mean gamble on it, especially on both sides. Whether you came away with money from these last plays, be careful not to go too crazy. That's what I'm saying. The move could be conservative if you really want to parlay. If you don't make any dumb trades for the next 2 weeks and then we start to pinpoint some of that stuff I mentioned, we could really, really make some nice moves, and then vice versa. If you're getting FOMO and you've been struggling and you haven't hit these plays and that FOMO is building up, you don't want to jump too far ahead now. So again, understand, option trader, show me risk. You can't lose out on most of your financial investment. Please consult with a financial advisor. Educational purpose only. So watch, see on stream, come ask questions. But here's Walmart. You can see November 22nd. That's the standard deviation. The first one, here's within 1 point, and you could see what the market's pricing in this gray area. And this gray area is literally by taking both at the money contracts and selling them. So it's saying if you try to play both ways, what would you need for it to break even? It would have to go either above this 123 or below this 115. That's on November 22nd. On the weekly, it's pretty much pricing in one full standard deviation. Now, Walmart has some of the other criterias here. That was Home Depot, sorry. But you can see the IV's dropping from coming in, and that's what we've seen on a lot of these. So even though the stock has been going up, the IV on it's been going up because it's gone up so much already. Historically, this is one of the lowest volatilities, and now it's hard to say just because you've been getting big moves coming in earnings. You haven't really seen that with Walmart. But I do remember their last earnings, they did have a big run-up, and lately they have, even second quarter 2019 and even 2018's third quarter. That's the quarter they're coming into now. But it has a lot of those factors you could see here, and then even two standard deviations out the money is about 19-20 cents. So you could see, throw it on the curve, it meets it. And this is for the November 22nd. So even November 22nd meets the criteria. We try to position ourselves in here for a cheap amount. It could be good. The question is, pretty much don't go too hard. And that's why I'm saying I think this could be a good play to play small, because it's kind of towards the later end of the cycle. We've hit a lot of plays. I don't want to keep pushing it, but at the same time, as long as we don't go overboard, it should be good. But I do want to see how it positions there. Or I'm even thinking maybe I position big and cut it off into earnings. We saw what happened with Qualcomm, but it's hard to say. I mean, be there on stream so you guys can see us when we do buy it, because depending on how the morning moves, this one might be a good one to pick up in the middle of the day. But I really have to see what's up with the market. But that's the criteria. It meets it. That has been good. So what I'm looking for, November 15th for the sickos, I'm probably 99% going to go November 22nd for the semi-demons. But I'm looking in between 127 and 130 calls. I like the 128 because it's one of my lucky numbers, and it's kind of right there in the middle. It's still two standard deviations, and it costs about 25 cents. And then you'd spend about 20, 30 cents on the downside. Now, this is what I want to wait for, because depending on the moves, 25 cents is still kind of expensive, because if I could get them like those quality worlds at 19, we could stretch the dollar a little further there. But again, that's why I want to see the prices. And again, if this persists here with the volatility, surprisingly, when they've already had these run-ups, you could even look at, I think the video might be another example, and they're the next runner-up, but the prices could start dropping because it's already had such big moves coming in here. But that is going to be the play of the week. We're going to be watching that. That'll be probably one of the bigger earnings I'm going to be focusing on. There is going to be a lot more, but this one has the criteria. It has other things to look at that you could even compare it to some of the other growth stocks, and that's what's even going to let me say, watch Home Depot and watch how they have been right up against each other, and then Home Depot even reports the next week. So Walmart's the main company, but then the next runner-up for earnings is going to be NVIDIA. The thing you can see here, they've kind of stalled after having that run-up. So this is what I was saying, where it could move a lot in earnings, but then sometimes it might just stop out right here. IV could go up or down, so it's going to be very prone to doing something random before earnings, meaning the IV could just jack up, or the IV's already been jacked up and it'll drop. So that's what we have to be hesitant for. But I think NVIDIA is going to be the runner-up. I'll look at them, but if I'm going to be very strict on my pricing. If I can't get anything, I won't take it, or I might even look for a spread depending on the premiums there and see what we can do for there. And those are going to be your two stocks that are going to go crazy this week, baby. So be smart with it. Ask questions on stream. If you play them, post your plays. Again, I'm sharing with you guys so you guys could learn from it, get this criteria down, as well as seeing what I'm interested in. And hopefully you come on stream. Hopefully you're on the watch list and bring one back. Let us know, man. Don't be shy. Win or lose, it's all good, baby. It's a cult. You know what it is. But beyond that, though, there's a few other plays I want to look at. But then I'm sure the biggest question from a lot of you guys is, what are we going to do with the Qualcomm? So that play was hot. You can see here I'm up $7,200 now because the puts expired. So it's saying now I collected $2,800. But remember, We lost $950 on those puts because they expired, so pretty much is down to $2,000. Take $950 from there. We're up about $6,300 on the play, so not too shabby. But now, how am I going to move forward? Well, I sold the 94s, and the stock right now is trading at 94.19. So I'm pretty much going to reach my max gain. It says I'm up 6,300. If by expiration, now here's how this play is going to work. I ran through it, but I want to show you how I'm going to play it here now with the Robinhood, because remember, we bought these on the Robinhood. So it went really, really high up. These Robinhoods now, we bought these for 20 cents. They're going for like 127 each. So not too shabby, but it's at 128 too, my lucky number. Hey, that's not my only lucky number, but it's like one of the ones I like, you know what I'm saying? Sometimes you just got to gamble on those sometimes. I don't know if it's gambling, option trading, shouldn't risk, can't lose out that much financial advisor, please consult with a financial advisor. But you know what I'm saying? Like, but what I plan to do with this one, if it stays at 94 at expiration, so think about this. I sold these for $3,700. Now I'm down $3,800 because they went up. But come expiration, if the stock's at $94, these are going to expire worthless. So I'll collect the $3,700. These won't have value, but these will be $1.50 in the money on 50 contracts. We'll walk away with about $7,500. That will be the max gain on that if it stays at 94. So now if it goes below 94, I'll collect that $2,800, but we already lost $900, so I'd walk away with about $1,900. So follow along with me. If it goes below 94 and below 90, if it goes below 94 and even below 92.50, I'll make $1,800. If it goes at 94 and stays at 94, where it's at now by the end of this week, I make $7,000, or excuse me, I make $12,000, excuse me, because then I would be up on the I'd be $7,000 on here, and I would collect the $3,700 there. If it goes above 94, then I only get the max gain, which is where it's at right now, $7,000. So that being said, it's a win-win no matter what, but now this is how I'm going to factor in the Robinhood. Now, if you guys own these plays and you don't have the other plays, you might want to just sell one of these and let it ride. It all depends on what you want to do and how you want to push it. But that being said, I'm just going to hold these now because this is kind of adding my supplemental play there, because if it closes at 94 flat, I'll lose on this play. So we'll lose this $200 even though the account's small, and although I want to build that account, if I lose on this one, that means I will make 12,000 or 2,000 here. And then if I'm going to only get 6,000 here and it keeps ripping past 94 this week, these plays have unlimited gain, and we could just pretty much get another 1,000 or 2 from there. And then I'll still make the other $7,000 on the other one, and yalla, we're good. So that's how I'm going to be maneuvering it, but you guys see we're in a win-win position. So from there, I'm just going to let it ride there. If you guys have an opportunity, I encourage you to try to do a spread like there, and you could get tricky with it and even wait till some prices come down, buy another naked option on there, or sell a spread, turn it into one of these ghetto spreads, and cap your gains so where no matter what, you walk away a winner. And that's what you could easily do with these 94s, because we bought them so cheap, and now the ones further out the money are so expensive, and Qualcomm's looking good. So that's how I'm going to be able to sit there. Qualcomm could do a lot of work for this week, so we're just going to be pretty much riding all of those plays out and connecting the two as you see. And then from there, though, Qualcomm is a good indicator of how to play some of these post earnings. You saw a big move up and it came back down and then shot back up. The contracts, those 94s that were in the Robinhood, those went down to like 10 cents at one point. Now they're back up to $1. That's great. So still watch post earnings. That's what I'm going to be looking at. And one of those examples, kind of like Disney. Disney could be hot in the morning. If Disney starts to get gas, I wouldn't be surprised to see it do what Qualcomm does. So I'm going to be watching those, watching Home Depot, then McDonald's. I love where it's at right here. This is either going to be good for spreads, buy the dip, or it's going to start breaking down again. So again, we need to see the rotational elements and see how stocks like McDonald's and what are the winners and losers. That is going to give us an idea of McDonald's tomorrow. So I'm going to be watching that. Then Boeing, same situation. It had that shoot up last week, and now it's kind of coming down here. It's a crucial spot. That one could set up too, but this thing about Boeing, you see both weeks, it's made these random moves kind of towards the end of the week, but then it'll slow down. So you could get caught up in a theta trap there. And then lastly, Apple, not for this chart, but Apple's back up. But this is what I'm saying with the rotational stuff. If some of these other earnings are going to do good and the market's going to price or whatever happens here, we could see Apple kind of give up. It did do it a little bit the last few days. The market, it kind of lagged and let the market do its thing. So we'll see where it's at, but they had a really strong close Friday. And then now Shopify too. This falls in lines with some of those earnings. It's near the bottom. It's holding up good, but kind of reminds me of McDonald's and that opportunity. We talked about Disney. Watch Roku as well too. Same situation with earnings. And now with the Disney news and everything else, they got my attention. So even where they're at this spot, key level, that's going to either break down or go up. And then obviously we're going to watch Qualcomm, and you could even watch AMD as a close second. And then I said this last week, I like Google. This one's going to be looking good for a breakout too if it keeps going up, but the key is going to be the pricing. So sometimes when it's been going up and up and up like this could actually benefit us because believe it or not, it's going up, but at such a slow pace. The ones further out the money could still be cheap, and then that could actually, if it starts to really break out and move, that'll be good. But watch out for all those, and kind of just like the Walmart and another play that we're going to be watching tomorrow is Expedia. I forgot about this one. We still have that play on there. We have the 95s for this week, or we sold that credit spread, so that one's kind of like another win-win scenario. But here's the thing with Expedia, you could see these people even asked, what did I think was going to happen after this move with Expedia? I said, when we explained this live, kind of the types of drops and bounces. You could see here, big drop kind of comes up, but now don't forget about all these other plays because these are all in place though. So you could watch Uber, they've had their drops, see kind of how they hold up, and that's, again, there's still going to be earnings continuations. We just need the market to kind of give us that optimal scenario to move like that. But then there's also going to be the stocks like ANET. ANET had the big drop. You saw what it did. So watch out for this pattern or whatever you call it so you can understand. There was Netflix. They went up, and I still kind of like them too because they're holding this price. So if there is a tech breakout or melt up, watch those. And like we said, Google, but that is pretty much your watch list. So there's a lot. Make sure you guys come on stream, ask questions. We're going to have another fun week. All you guys got to do, be positive and respectful and stay grateful. Remember, man, this is fun. We're living through an awesome time. Just be excited you're in the game and in this moment. Don't worry, baby. It's a long future. I know. Well, it's a long time future. We got a bright future, a long time. You know what I'm saying? But you guys know what to do. Stay hydrated, healthy, ready to go. Make sure you guys post your watch list. I'm going to see you in the morning. Get your head in the game. Don't even think about giving up, and let's go.